What's good, people? Hope you're doing well. Welcome to this video. So slightly different today. We're actually going to do a trade recap, and I know you've been requesting it quite a lot, so I listened, created it, and now it's going to be good. So we're going to dive into a trade recap on CAD yen. So these two trades that I took last week, screenshots will be here, and we're going to dive into a few mini lessons alongside that as well to hopefully give the value, because I think that's where the value is really going to lie, apart from the trade recap. So that's going to be good, but without further ado, let's roll the intro and get straight into the video. No messing about today. I really want to dive straight into the video and hopefully offer as much value as I possibly can and make this applicable to whatever style you trade, whether it's support and resistance, whether it's patterns like myself, whether it's indicators, like whatever it is. I want to make this applicable to you too. So hopefully these tips are going to provide value alongside the mini lessons. So without further ado, let's dive into the trade recap. So these two positions ended up banking just under 9%. I think it was 8.9 or 8.88 to be specific. So let's actually jump to the higher time frames and start off with the weekly chart. So before we actually get into the trade recap, something important to mention is the fact that a lot of people ask me what time frames I use. Usually I utilize the monthly and the weekly chart to start off with my analysis and then build it from top down to the daily, the 4 hour, the 1 hour, and then the 15 minutes sometimes for entry. So always build your analysis down. A lot of traders start off from the 1 hour or the lower time frames and then work their way up. It's supposed to be in reverse. Start off with the higher time frame structure, then work down to lower time frames. That's where the value is going to be in terms of your trading. So hopefully that helps. But diving into this, on the weekly chart on CAD yen, what was we looking at? So I'm just going to use the replay mode here and rewind price back a little bit to what I was actually looking at in real time. So I took this trade on a Tuesday, so let's just fast forward one day. So on the Monday, it was looking something like this, right? So naturally, double top area within the pattern, it was looking really clean. And on the daily chart, if we just look at this is where the real simplicity lies. So with this pattern, we can see the overall clear nature within this pattern, right? And we had all the characteristics within this pattern for the completion of it. So with that in mind, what I mean by that is we had this first touch here, second touch, looking for that ideally third touch here to then potentially take that to the downside, right? And within the pattern, what do we usually have? Well, for completion of the pattern, what you will usually see is an impulse, a correction, this essentially acting as the middle section within the pattern. Then we'll get the move up before the heavy moves down, and vice versa in bullish territory as well. So that's what we look for. In terms of the 1 hour chart, let's drop down to the 1 hour for the entries. So here's where forecasting comes along. I think a lot of people see me forecasting on YouTube and Instagram or whatever it is, and they kind of think it's a wishy-washy technique that I just use with a drawing tool and just kind of draw squiggly lines upon that. But it's just not like that. You're planning in advance, so I really want to go over this, hopefully hammer the point home and really hopefully convince you to start utilizing it within your trading, because it's so powerful. So what I mean by that is going into the first mini lesson, let's start off with this, right? Which is actually knowing your entries in advance. It's so important to know your entries before you get into the trade. The last thing you want, right, is to be reactive within markets. And how do you be reactive in the markets? Essentially, you don't prepare, right? So if you don't prepare, don't forecast, don't know what, you have an idea what you're looking at, but when the market then produces that setup, you're kind of reactive, you're then reactive in the markets. Whereas if you're planned in advance, so you know exactly what you're looking for, you plan the different variations, you planned your entries, you planned how you're going to manage the trade. There's no second guessing. You know what you're looking for. There's no hesitation. There's no fear of missing out. You're then in a proactive state of mind within the markets, which is a huge advantage in my opinion. So with that in mind, by the way, don't take any of this as gospel, but this is just my experience. This is how I trade, and it's helped me so much. So first point, knowing your entries in advance. So this is the key thing, right? So as price developed on this pair, right, I had two entries in mind, two areas of key value that I was looking at. So the first one being here, right, at the top of the structure, which was in this nice intersection which I was looking at. So we had naturally this 1, 2, third touch, looking for any ascending formation, 1 hour retrace, break of a phase line to then take this to the downside, right? So naturally, if we then look at this, by the way, I'll post a forecasted screenshot up here right now for you guys to see more details, see the actual live thought process of what I was looking at in real time. And I was looking to take this to the downside, let's say 20 pip stop, right? Targeting the beginning of this correction here. This is just one big correction, so naturally just targeting the beginning of it for likely just under 10% profit, right? So that's with a 20 pip stop. If we were to get in slightly larger with a 25 pip stop, as we can see these numbers here, then that will bring it down to 7.89, the risk to reward ratio. And then if that's slightly tighter, let's say just under 18, then we've got 11%. So naturally there was a lot of room within it, but was there an area that price could essentially go before this entry? So you have to understand that the market works in probabilities, possibilities, right? So being in a mindset that, okay, well, it has to go here, or price has to move to this, and that's my only area of reference to taking the trade, you're going to kind of limit yourself. That's what I used to do a lot of times, having a set bias on a pair. The price has to go to this area before taking the sell, taking the buy. That kind of limited me a lot, I feel, in my beliefs. So being in a probabilistic state of mind within the markets is without a doubt one of the biggest keys for me. Nothing within the market is certain. Everything works in probability, so you need to think in that way. So with that in mind, I understood that price could actually create a pattern within this and potentially move to the downside. So quick tip as well, with whatever strategy you trade, when the market is at the top or bottom of a structure, for example like this, right, that's when you utilize more pattern separation, because what you'll find is that the market tends to create extensions of itself, try to catch people on the wrong side of the market, which I've talked about on numerous occasions before the bigger moves commit to themselves. So same thing here. So I start to notice a pattern within a pattern, which actually increases the confidence. So we start to draw this pattern in, right? So if we just look at this for what it is, let's look at this pattern. So how did I know this was a pattern? Bringing it back to what I was looking at before, on the daily time frame, I was talking about the middle section within the pattern, the impulse to correction, the impulse before the completion of the pattern takes place, right? Same thing here. So on the lower degree, this is how I know that it was creating a pattern of its own. We had this larger pattern, which ideally the entry was here, but I know that price didn't need to get all the way there before moving impulsively to the downside. So we start to form this pattern in itself. Once again, pattern separation, right? And we start to form this 1, 2, 3 type formation, and we actually had, once again, like I said before, impulse within the pattern, correction as the middle section, the one will move up, looking for the sells here to then take that to the downside. So this had all the characteristics within my plan to then take the trade. So I was just looking for a little bit more development. I think this was around about 8, you can see there, right on the bottom of the screen, just like 5 p.m. So naturally approaching low volatility time, so I was naturally just giving it a little bit more time. So what I was looking for in these areas was just a little bit more development as opposed to a forecasted scenario here, and I was looking to take this to the downside. So naturally this just developed a little bit into the early hours in the morning. Here was when it was ready. So by the time I woke up, which was around 6, right, this was 2 p.m. So during the night, start to develop 1, 2, 3, start to form a pattern within the overall bigger pattern. So inception within the strategy there. But what we did, think this was, no, we got one more move up, I believe. Yeah. So this was around 5 or 6 a.m. when I woke up, then set the order below. So actually utilize this. Here we go. So I set the order below, right? And I was triggered in shortly afterwards with the 7 a.m. candle. So triggered into trade there. And it all goes back to knowing your entries in advance. Like, that's the key point of this video. Know your entries in advance. It's almost like, it's the same as an athlete would approach the game, right? If, for example, let's use Kobe Bryant, right? Going into a basketball game, I've heard podcasts with him before of how he talks about the game. He always used to prepare for games in advance. After the game, he was back watching the video of the game, the recap of the game, to study the game, know exactly what he was wanting to work on going into the next game. So it's the same principle with trading. Why can't we apply the same thing athletes do into our trading? You can. Forecasting, knowing your entries in advance. I knew that before I got into the trade, number one, this was the entry. So if price was developed, create an entry within here, I'd happily take that trade, which I did. No brainer, then took the trade. But here's the key, accepting the risk beforehand getting into the trade, right? So prior to getting into this trade, I already knew that I was happy taking a 1% loss. So if I was tagged into this position and then it moved up, created that ascending formation that I was looking at as my ideal entry, I was happy taking a 1% loss because this is in my plan. This is a key area of value to be taking the trade. So if I have to take a 1% loss, right, and then get back into the trade from here and then back 10%, the 1% loss is irrelevant. It's just capped at 1%, whereas the profit is essentially limitless, right? So you have to think in that mind frame. So I was triggering into trade shortly afterwards with that candle, kind of trickled around a little bit. Once we then got some momentum and commitment from this pair, that's where I then moved to break even. So I believe it was around about just above 1%, and then I moved to break even. And once again, I'll post a forecast of scenarios, what I was looking at going into the day ahead. So naturally break even. Here, again, once again, on the ball. I'm on the ball with what I'm looking at, looking for just a correction, just a tight flag correction in alignment with my plan, following the first initial impulsive move, which is the highest probability correction to take, and then looking for that to take that to the downside, targeting these areas here at the beginning of the correction. So that was looking nice. Just seeing how this developed. I think naturally this was in the later hours of the evening, 10 o'clock. So waiting on this through the night, and then this was looking really nice. So with that in mind, I think once we had these clear bottoms in, so we had this clear bottom, I naturally set my entry order just below. So set my entry order just below, which was this position here. So set my entry order there, tagged in the next hour with that impulsive candle. Naturally, I think that the hour afterwards I then moved to break even. We'd had commitment to the downside. I was running more than 2%, happily moved to break even. Naturally, once we get to 1% profit, I'm happy moving to break even. There's different circumstances that I do so. For example, if we're at the top of the structure, you have to be a little bit more lenient with it because price can naturally hover around like we did here, like you can see on this example like CADJPY, before then it commits. But with these reduced risk flag style entries, I'll be a lot more aggressive and I'll move to break even, because if price was to retrace, then it's naturally creating a different pattern. I'll happily take a break even, and in those situations, if you didn't take a break even, you would likely take a 1% loss based on what I've backtested previously. So naturally move to break even around this area, and nothing was locked in at this point, so I had this at break even, and I had my other trade open as well. Right, this was locked in. As soon as I moved this second position to break even, I locked in my first profit here around 1.6. Right, and then I was expecting another continuation to potentially move to the downside, which is what we formed. Definitely not clear on the 1 hour, but if we drop to the 15, we can start to see it in a lot more detail. Right, so we can start to see this pattern, essentially just a variation of a correction that we look at. Right, start to form this pattern, start to get some more commitment to the downside. So once we got that, that was really nice to see. Definitely commitment, and I knew that we were going to likely fulfill this move, so that was really nice. At this point, once we got that commitment to the downside, I then locked in profit here. So just above here, giving it just enough room to breathe, but also being aggressive. So something that I apply within plan is that the more price develops within the move, and the further we get into the move, that's where I'll naturally become more aggressive, because that's when we can start to experience more bigger pullbacks and deeper corrections. So naturally, I don't want to be holding through deeper corrections on these shorter term trades. I'm happy to get out, bank the profit, and then get back in once the other entry is produced. So I locked in just above 2%, and then just above 4%. So I knew I had 6% locked in at this point, and then as this started to develop once again, start to drop. So as this did, I then locked it in above this swing high here, like so. So like 5.4 and then 3.3. And at this point in time, it was getting very interesting. So I had a few variations planned. So I was looking at to see whether this corrected, dropped, start to form this descending formation. This giving us a clear indication that this was either going to come back up to test the highs or create much a deeper correction, or we just get a larger structure form like so, and then continue dropping. So if that formed, then I knew within my head I was going to be more aggressive, lock in profit. Once again, you can see that go up to 7, so naturally a lot more profit locked in. So I knew what I was looking for. Or if this actually developed into a bigger correction, right, like so, then I was just giving it just enough room to breathe, just above here, to then not get tagged out and then still drop and then take another entry in here potentially. So that was looking good, but just being on the ball with the management here. And then price started to correct back up and then start to move to the upside here. So that's where it tagged me out. So it literally just tagged me out with the wick there. Total banking just under 8.9, so 8.88 to be exact. And very nice trade, very healthy return. Definitely do exactly the same thing again. And also got a shorter to medium term trade still open on this. So I've closed these two trades, got another trade open from the top here that I'm going to be holding likely throughout Q4 to see how that develops, but it's more of a set and forget. You've seen me taking longer term trades before. It's similar to the euro pound trade, just a lot longer. So I'm going to be holding that, especially developing experience through managing those trades, learning a lot from it, but that's going to be a medium to longer term trade. So we'll see how that develops throughout the rest of the quarter. I'll likely do updates on IG, stuff like that, but that's going to be good. But overall, the main lessons that I want to take you through this, right, is knowing your entries in advance. That's a key thing, like I talked about before with the athlete, right? Athletes are prepared ahead of the game, and then when the game steps up, when it's game time, they know, cool, I'm in the game time to commit, right? Same with trading. You should prepare your trades. I don't want to say should, because everyone's style is different, but it's smart to prepare your trades in advance, right? Know exactly what you're looking for, and then when those trades then develop, you're naturally not going to be in a reactive state. You're going to be in a proactive state, which then helps with the psychological aspect of trading. So you'll naturally notice that you experience a lot less fear of missing out, a lot less hesitation, and a lot less psychological things that we experience as traders, right? That's how I found it. I was feeling like I was feeling a little bit of fear of missing out, more so hesitation, stuff like that. But the more and more you utilize this stuff, it's super beneficial. So give it a go for yourself. I think the last point I want to mention is auto-suggestion as well. I mentioned this in my morning routine video as well. And you know, you may look a bit crazy, especially if someone walked past the door and hears you talking to yourself. But essentially, the science behind that is super powerful. So if for those of you who have read Think and Grow Rich, Napoleon Hill talks about auto-suggestion a lot and actually ingraining things into your mind through repetition. That's essentially what I'm doing here, right? So naturally talking to myself out loud, which then ingrains it within my subconscious mind, which is naturally going to reduce hesitation, fear of missing out, these emotions. Like, it's a no-brainer to apply into your own trading. So if you heard me on the morning routine video being a little bit weird, auto-suggesting to myself, yeah, it may look weird, but it just helps my trading, so I'm going to do more of it. So yeah, definitely helps. Definitely give it a go for yourself. But before we end out this video, I want to give you a prime example of that, of auto-suggestion. So, taking a look at this, right, just to give you some more value. If we just take a look at this, naturally as price was in these areas, again at the start of the video, you'll naturally see me talking to myself. So I knew, okay, well, price is in key areas right now. I'm looking at a few things. So if we get any sort of ascending formation around these areas, naturally looking to take this to the downside from here. So naturally get in here with 20 pip stop, judging by CADJPY's typical behavior, taking that to the downside. And then as price moves to the downside, I'll then manage this in accordance with the structure, trailing my stop in accordance with the pattern. So that was looking clear. If price was to move up, happy to take a 1% loss in this area. If price was to tag me in, tag me out, because of the significant area of value that we were in. So if we were to create the same typical type of entry here at the top of the structure, happy to get back in these areas in alignment with my trading plan. Taking this to the downside, likely a 20 pip stop, taking that 9.7. So that was looking good. Once again, managing in accordance with the structure, trailing my stop in accordance with the pattern. So that's what I was looking at. You can see there, right? Just talking to myself, prime myself for executional mode for when those setups then occur. So it's a no-brainer. Give it a go for yourself. I guarantee you it's going to help you. It may seem a little bit weird when you first start doing it. It was for me too. But the more and more you do it, like anything with practice, it becomes subconscious. So hopefully that helps. Hopefully you enjoyed this video, this trade recap. I know you guys have been wanting it for a while, so hopefully provided insight. And yeah, definitely give a follow for myself on Instagram. Definitely going to be doing a lot more trade recaps and screenshots as I'm actually going through the trades with live management. So definitely give that a follow. And yeah, hopefully connect with you guys soon. So yeah, share your ideas below in the comment section and I'll answer as many as I can. So catch you all on the next one. Have a great week. Speak to you all soon.